this trade maybe $1,200 yesterday. And today I'm going to be showing you exactly how I took it, why I took it, and the rules that I follow every single day that I trade. Quick and simple video, no complication, straight up. Let's go. All right, so this is ES. For those of you who don't know, I'm a futures trader. I trade only futures and mainly only just NQ and ES. So because of the Iran war, the markets have been kind of interesting. So here we have NQ. Hold on, let's go to the same time frame. For those of you who don't know, the S&P 500 and Nasdaq 100 are correlated pairs. So because the reason why I trade both is because some days the setup forms on either or if my bias is long and one of the indexes are more more bullish than the other, I'll take the trade on that one. And yesterday my bias was bullish, and because of that, not only was NQ bearish, it was also forming some really interesting setups. Right here we formed one, but I'd already been in a trade on ES. So this was NQ's price action. This is the exact time where I took a trade. Around 10:04 is exactly where I hit TP. My TP was set above this high right here. This was all-time high, so I longed up to there. At 10:04 is exactly when it hit, and it kind of just ripped up, honestly. ES was showing a lot more signs of bullish structure. It was respecting more gaps. It was disrespecting the bearish ones. More consistent break of structures, just smoother price action to the upside, while NQ was just doing whatever the hell it wanted, and it just looked more bearish in general. As we can see, it reached this high at around 1040. We can see there's a lot more wicks to the downside. There's a lot more breaker structures to the downside, and it took longer to even break structures to the upside than ES. There was a huge SMT divergence yesterday. While ES was all the way up here, already broken this structure, NQ took a lot longer to do that. So obviously, what we can see from the information that I'm giving you is that ES was a lot more of a bullish index, so I took it on ES that day. So that's why I traded that index. Why did I even determine that I was bullish in the first place? First of all, what I do every single day before I even take a trade is look at the high time frame trend. So obviously we're in an uptrend. We literally broke so much structure. We literally took out all of the previous highs that we had from earlier this year, and we're just constantly ripping up. We're obviously in an uptrend, so I'm gonna mainly be looking for longs. And sure, that doesn't mean that we can't break structure to the downside. That's what we did later on in the New York PM session later on. But what I'm mainly focused about is, we're in an uptrend, and if we see where we were yesterday, so this is where we are, ignore all this. The 1 hour didn't show it much. The 15-minute definitely did. It showed that we were starting to pull back, and knowing New York session, it's going to want to rip in either direction. And if I'm being honest, because of this huge overextension, and because Asia session didn't do anything, I was just thinking that we were probably going to go bullish anyways, or go bullish rather than bearish, because we're already ripping up. We're in an uptrend. I think, if we're constantly reaching all-time highs in the past couple of days, I don't really see why we're going to want to swap the down, because the news for Iran isn't that crazy, except for later on in the day. The Strait of the war news kind of changed. The Strait of I can't remember what it was called. The Strait was opened, so that might explain why we kind of I don't know why that would affect the market coming down, but anyways. So yeah, I was more rather taking I was more comfortable with taking longs, because we're in an uptrend, and we're just constantly ripping up. I think the indexes are going to want to follow that. There's not really a reason that they would want to come down and grab these lows all the way down here. Even though they were session lows, I think it's just going to want to ignore that, considering, if you see where we were yesterday, ignore all of this stuff, literally all of this information was not even here yesterday. If we just see this, we're constantly ripping up. I think right at New York Open, we had a little pullback retracement into this gap as well, this 1 hour gap, or this 15-minute gap, sorry. I think we were going to want to come up after that. So not only was I already bullish because of the high time frame trend, we tapped into this 15-minute gap, so I was pretty sure that we're gonna want to come up and take out the liquidity above the all-time highs. So that was my bias. So I was bullish on the day. We know what index we're trading, or at the time I knew my bias, but I didn't know what index I was trading. So what did I look for? I looked for my entry. Now my entry is very simple. I look for a liquidity sweep, which is mandatory. I look for a liquidity sweep. Usually I like to take it on the 1 hour or the 15-minute because usually right at market open, New York will sweep either side liquidity. But because, in more stable times, it'll do that. But now we're just kind of ripping up and constantly ripping up. So we're just overextending. So, there's not really too much consolidation. So I didn't think it was going to do that right off the rip. And that's why I didn't look on the 1 hour. So today I looked for either on the 15-minute, or yesterday I looked on either the 15-minute or the 5-minute. But right as market opened, we kind of just came up and we took out. There's nothing really here. We have this 5-minute gap here, but yeah, we kind of broke through it. It was a breakthrough gap. So right after here, I actually came down to the 1 minute like really fast actually yesterday. I was barely even on the 5-minute. I was looking for some sort of sweeps on the 5-minute, but then yeah, I didn't really see anything. So I came down to the 1 minute and I was thinking, okay, we're just gonna micro scalp just up to these highs, hopefully. So we did a lot of waiting yesterday. Actually, my bias did end up changing to shorts because we did kind of have this crazy thing here in pre-market, like on the 1 minute at least. Even though we tapped into this 15-minute gap, we had this price action right off market open. We continued the downtrend, and we kept disrespecting, like on the NQ. We kept disrespecting bullish gaps. So I was like, okay, maybe we take shorts, but I didn't see that. I didn't even look for an entry. It was just kind of popping in my head. Then we swept this liquidity right here at about 9:48 on ES. I don't know about NQ. Let's see what it did. What time it did that? Yeah, same time. It didn't actually sweep. It was an SMT. And that kind of confused me because at this time I was thinking, NQ was showing so much bearish stuff. I thought, what I was looking for is I wanted NQ to take longs. I wanted NQ to follow that. I wanted the more bearish index to, be bullish. I wanted to follow ES, so that kind of gave me some confirmation to take a long when there's an SMT. And for the people who know what SMT is and they are confused why I didn't take it on NQ, that was the only like bullish kind of like thing that NQ gave me. ES was looking a lot more bullish, and it was moving way faster than NQ. NQ was moving really slow, so I decided to take it on ES. Anyways, we swept this liquidity. We're on the 1 minute. We swept liquidity. So that's boom. One of our first entry models done. Then I have my continuation model. The continuation is either a fair value gap, an inverse fair value gap, or equilibrium hit. So I looked here. We had a inverse fair value gap right here. We had a bearish gap, and I was thinking this gap is either going to decide where I'm going to go for the day. We're in a downtrend. I'm thinking, or we're in a downtrend on the 1 minute. If it respects this gap and breaks structure to the downside, I would have taken that trade right there. So imagine all this info is in here, or imagine all this data is in here. Right here, if we would have came up and respected the gap and broken structure past this low right here, I would have shorted down to this low, down here to session lows. But we did not. We broke it. So I'm thinking, okay, yeah, we're 100% bullish. So boom, we have our continuation model done. We have our liquidity sweep. We have our IFVG. Now we look for one more thing, and that is a break of structure. We technically broke structure above here, but this was in a gap. And also, I was not sure if this is just a temporary. Right here, we're in a downtrend on the 1 minute. I was really unsure if we're either going to break up structure to the upside and follow the higher time frame trend, or break structure back down and swap the trend to a downtrend on the high time frame. On the 1 minute, you can obviously see we're in a downtrend. I keep saying that. We inverse this gap, but there is a bunch of highs up here, and I know for a fact there's a bunch of liquidity up here. So I was really scared that price was going to come up to these highs and sweep liquidity and come down. So that's why I did not trade at this breaker structure. I wanted to come up here, close above the high, not below it, close above it, a breaker structure, like a better breaker structure above these highs, and then I took the trade. So you can see I took the trade right here because of the breaker structure up here. This is a really rare day where I take a breaker structure really high up, because this breaker structure above here confirms that we're swapping the trend. Like this entire trend is just gonna swap, which it did. So that's the only reason why I took a breaker structure all the way up here, except for down here, because we're in a downtrend and I'm not sure if price was going to come up, breaker structure here, continue up here, and then just reverse off this high because the liquidity sweep and just go down. So I waited for here. I waited for the candle to break here, and what do you know? It broke the structure, it closed, and I entered. So boom, that is our entry. We had our bias, which was because of high time frame trends and stuff like that. And usually my bias is also found on fair value gaps, inverse fair value gaps on the high time frame trends, but we didn't have that. So I just looked at the overall trend today, and I looked at the lower time frames to see, okay, where are these little reverse is happening. So as you can see, like I was not for sure that I was going to be bullish. I was just thinking that because of the high time frame trend and all-time highs. But then the 1 minute, what the 1 minute was telling me is that we might be able to reverse because of this is starting a downtrend, and it's respecting more bullish order flow, or bearish order flow, sorry. But then we broke structure above here, and I confirmed that we're going to start going up. So we had our bias, we had our liquidity sweep, we had our inverse fair value gap, one of our continuation models, inverse fair value gap or equilibrium. And then we had our breaker structure, and we entered. So we entered right above here. And then where are we going to target for our TP? Right at all-time highs, at this high right here. And it did that beautifully. Our lows, my low, if I took a breaker structure down here and I entered here, this trade would be very different. I would have, entered right here, and I would have, gotten a little bit more profit, and my stop loss would be right below this low right there. But we took it above here. So obviously, that's kind of, I'm not going to take that. I'm not going to have my stop loss all the way down here. So where am I going to have my stop loss? I had it right below this bullish 1 minute gap right here. So if we were to inverse that gap, that probably means that we're going to break structure back to the downside. But then we created this low right here, so I put it right below there. And yeah, that's a crazy stop loss, I know, but this is a very good low. So I was thinking, if we break structure below this, we're probably going to swap the trend back to back to the downside. And that's pretty much it. That is the whole process. That is pretty much what I look for every single day that I trade. I always look for my bias. I look for my daily bias with high time frame trends and fair value gaps, inverse fair value gaps, and equilibrium, just stuff like that. I just look for those on the higher time frames, like the 1 hour, the 4 hour, never daily and stuff like that. The only time I'll look for daily is to see if we're reversing really high time frame trends. But usually we're scalping, we're not looking for daily trends. So I'm usually on the 1 hour or the 4 hour, first looking for my bias. Then on the lower time frames, usually on the 1 hour, 15 minute, or 5 minute, I look for a liquidity sweep off of session lows or highs. And then I will finally look for my confirmation, which is the inverse fair value gap, or an equilibrium hit. And then once we get that, I look for my confirmation, which is a breaker structure, and then we enter. And then we target the highs or lows. My entire trading process simplified into one video. I hope you guys enjoyed. Make sure to subscribe, because for the next 60 days, I am posting every single day on this channel. I'll see you guys tomorrow for day 3. Peace.